Dun, dun, dun. Lots going on. Lots going on. Government shut down. Potential peace in the Middle East. That'd be a wild one. I love blue Gatorade. It's so good. Anybody here yet? Not yet. Let's see what's going on in the news. Finance.yahoo.com. Let's do a share. A ba-boom, ba-boom. Come on. There we go. Live news feed. What is going on? Oh, AMD CEO AI critics are thinking too small. You're thinking too small, folks. Little too small. Slow motion melt up rally. Yikes. Trilogy metals. Yeah, I was having this conversation over the weekend. We're like getting into all sorts of rare earth companies. It's nuts. Gravity sales, OpenAI, huge focus. Gold climbs near 4,000. Let's see where the chat's at. Ba-boom. Cooper, what's up, man? Oh, nice. Portugal, Lisbon. Heard it's absolutely beautiful over there. Yeah, AMD and OpenAI. Wild. Wild. I mean, this is something else, huh? It's, the critics are thinking too small. When I saw the stock was up 28%, I was like, what the hell is going on here, man? Oh, no, we don't want this, those stupid ads and stuff. Let's see what Francisco Velasquez has to say. It's time for the tech world to think bigger about artificial intelligence, because we aren't thinking big enough, apparently. You have to really look at what the power of this technology can do for the world, says the CEO of the company benefiting from it. Investing at the right pace because we want to accelerate. This is a place where and when companies and partners make bold moves, it will be rewarded. Yeah, when I looked this morning, it was up 28%. I was like, what in the hell? AMD will supply up to 6 gigawatts of GPUs to ChatGPT over several years, starting in the second half of 2026. Okay, so that's basically a year from now. AMD also issued OpenAI warrants. So how's the stock going up as a result of that? That doesn't make sense. So then OpenAI is going to get a stake in AMD? How is that good for investors? That would dilute investors. Madness. The deal could generate tens of billions of dollars of revenue. Okay. News comes on the heels of NVIDIA's own $100 billion bet on OpenAI, underscoring the escalating race to build out AI infrastructure. Although nobody actually watched the video, last week I was pretty shocked with, or 2 weeks ago, I was shocked with Microsoft. They're like way ahead of everybody else in the AI data center build-out race. They're blowing everybody's doors off, but the market doesn't seem to care. $600 price target. This bananas. All right, we're gonna stop sharing that. Let's see. Oh, I'm buying Copart. Strong moat, very good business. Yeah, let's dilute investors 10% as the stock goes up. It's like this doesn't make any sense on the surface or otherwise. All right, so Copart, it's official. Buying it. Boom. I looked at it last time, but I didn't really dig too crazy into it. Let's go look at FinViz, see what's going on with Copart. CPRT. Oh, they just filed. Okay, maybe that was why I decided to buy. Let's see. Come on. Copart. All right, so it looks like it's been on a little bit of a downward trend. Okay. Copart Copart files annual 10K report with the SEC September 27th. All right, so that was a little more than a week ago. And year to date, it's down about 23%. Let's see what the analysts have to say. Bam, upgrade, HSBC, price target 62. Take that, bam. That's nice. Okay, so $18. Yeah, that's pretty significant. That's basically saying it's like almost 50% undervalued. That's pretty wild. Stevens initiated at 50. That's not as impressive. The 62 price target's pretty impressive. I'd be curious to see if they updated anything based on the new 10K. Stock slides as market rises. Facts to know before you trade. Let's see. Stock has fallen in the past month. Upcoming earnings release will be of great interest on that day, but this was after the earnings release. It's at a forward PE of 26 times. Industry has an average of 34 times. The auction and valuation services industry. Interesting. Yeah, this is the whole crux of me looking at Copart was you mentioning it. All right, I'll stop. We'll go back to the chat. That's why I sold. Still a huge believer in AMD, especially the CPU space. I agree. More so than Intel, that's for sure. The expectations are so insane. True. They have to crush earnings. If they don't and the stock falls, I'll probably buy. Yeah, I mean, like I dipped out of Nvidia for the exact same reason when it hit like the 160 range. Now, I mean, you could just hold on and, assume that it's going to continue to go up, which is fine, but it's just like, it's bonkers. It'd be like Palantir. It's like, get in at a lower price. There's much better value out there. I'm loving my blue Gatorade Zero. What is this? Cool blue. Loving it. Constellation Brands reported today, and I saw that it was up after hours. So let's go see what's going on with those guys. I know I saw like the base report. It was like nobody's drinking anymore. Oh, it's up 3% after hours. 143. That one's interesting. I wonder if anybody updated their... Let's see. I wonder if anybody updated their model. I didn't want to cover it this week, but I'll probably cover it next week. I noticed that it had ripped over the last week. It's up like $10. All right, so let's see. I'm going to share that. Sharing is caring. Here it comes. All right, Constellation Brands. In the last week, it's popped a bit. Downgrade to 150. Downgrade to 123. 123. Holy moly, that's really bad. 150. 150. It's still a slight discount. You had an upgrade, Jeffries, 205 on July 7th, and they don't look like they've updated. Truist upgraded May 7th. Yeah, it was kind of a while ago. But it gives the target price 172.50. That's interesting. Yeah, but I haven't dug into the earnings. I just noticed that. Let's see. There's the details. Constellation Brands reports fiscal Q2 2026 earnings with a revenue decline of 15%, beats profit estimates, but lowers full year outlook again amid continued sales weakness. Yeah, that one seems to be like a stereotypical value trap. Although I'm still invested in it, I'll probably buy more. Yeah, we were talking about AMD just a couple minutes ago. It seems like ridiculous at this point, and they're issuing warrants. Like, it doesn't make any sense. Like, you're diluting the shareholders. They're basically saying they're going to be diluting the shareholders. They're giving OpenAI a stake in the company. It's just like, it's bizarre. What are some value tech companies that are looking at? Meta, they're actually, of the Mag 7, they're still, Meta and Microsoft. I would say Meta even more so than Microsoft, shockingly. Yeah, I would say of the Mag 7, like, everybody's ripped. Apple's overvalued, no question. Tesla's past my intrinsic value. Microsoft still at enough of a discount, I believe, unless they popped as well. MSFT. No, they popped too. It's like everything's just ripped. Meta's the only one that seems to be still at a relative discount. But yeah, it's like there's not much value to be had in tech right now. Everything's just like going bonkers. So David said, I don't understand what the agreement is. So basically, AMD and OpenAI signed an agreement where OpenAI is going to invest like $100 billion in AMD chips. It's going to start the second half of next year, but the problem is they're giving warrant. I don't understand the logic. AMD is giving warrants. Warrants are basically a type of call option. They're giving them on the shares of their own company. It doesn't, like, I can't understand the logic. So basically, AMD shareholders are going to get diluted. So I don't see how it makes sense for the stock to go up like 30%. It's bizarre. So yeah, Cooper, I'll just put it up on the screen. AMD will sell GPUs to OpenAI, and as they do, OpenAI gets warrants. So the idea is OpenAI gets equity as they buy more and more chips. So for AMD is the hope that they make sales stop rip so far above the dilution. Yeah, I mean, it's just bizarre to me. It's like you and I agree to go into business together, and then I give you ownership in my company. It's like, oh, it doesn't stand to reason. It doesn't make sense. But when I saw the stock was up 30%, it's like, what the, huh? It's just bizarro world. It's nuts. I mean, I'm actually curious, like on a percentage basis, what it would mean. Here, I'll pull it up, AMD. What it would mean in terms of their overall revs. Let's see. So their revenue trailing 12 months is about 30 billion. So it's like tripling the revenue. Because it's $100 billion deal. Here, I'll share my screen so you can see what I see. Nah. Here we go. Okay, so AMD shares, multi-billion-dollar, multi-year AI chip supply and strategic partnership deal, including OpenAI taking a 10% stake, which again makes no sense. But then if I look at the financials down below, it shows trailing 12 months, they have about 30 billion of revenue. And unless I misread the report, it seemed like this was 100 billion, which would be bonkers. Let me see. I'm going to just pull up the article that I saw earlier and then share it with you guys. All right, let's share this. Stop. And then we'll share this. Yeah, it's just like it didn't make sense. I mean, so if they're going from 30 billion, they're giving them $100 billion of revs. That's like triple. I hate this stupid ads. Meh. A multi-billion-dollar partnership. Okay. A multi-billion-dollar partnership, one of the largest infrastructure deals to date. Up to 6 gigawatts of GPUs. Okay. 160 million shares. So they're giving away 10% of the company. I still don't understand that logic. It doesn't make any sense to me. The news comes on the heels of NVIDIA's, okay, that's where I'm getting confused, own $100 billion bet on OpenAI. So here we go. Sue said the deal could generate tens of billions of dollars over the next few years. So again, this is very ambiguous, right? So AMD's trailing 12 months revenues about 30 billion. It's 29.6 billion. And this could generate tens of billions of dollars, and they're giving away 10% of the company. I'm lost here. I saw the 100 billion. I was confusing that with the NVIDIA announcement. So this is even more bizarre. It's just like super ambiguous. All right, so here we go. Barclays analyst Tom O'Malley, top of the morning. So the structure, which includes stock warrants triggered by milestones and a $600 share price target, is designed to be mutually beneficial, but is also aimed at driving the stock higher. He estimates the deal could add $18 billion in annual revenue and $3 per share in quarterly earnings by 2030. 2030, that's 5 years from now, if deployment progresses as expected. Okay. Citi analyst Atif Malik noted the announcement also benefits other AI ecosystem players. Here you go, Karen. Astera Labs, which supplies networking infrastructure tied to the Helios platform. Maybe that's where the added value is. A 10-year kind of super cycle. Okay. Still in the early innings, which I agree. They still haven't even built these freaking data centers. So I do agree with that. That is true. Oh, here come the chats. So then, which industries would you consider as alternative to tech for value opportunities for long-term growth? Infrastructure, all the infrastructure that's needed for all of this AI. That's really what's going to benefit. So whether that's, power companies, nuclear power. We just saw that Astera Labs helping build out some of the infrastructure. So those are the key things. We talked about Sterling, STRL, Sterling infrastructure. They literally just build data centers. That's their core competence. So it's going to be stuff like that. That's the stuff that's going to benefit outside of just kind of like traditional tech. Unrelated, but in the chemical world, Berkshire is buying OxyChem and Carlyle's buying BASF Coatings. Interesting. Now, I have no interest in any chemical companies, but clearly someone is seeing value. Yeah, so chemicals is a cyclical industry. So there's obviously got to be something that they're seeing, to your point, because those are two big players making two big investments. I mean, again, I'm just like totally like pulling out of the sky, what the connection would be. BASF Coatings. Don't know what the play would be, but that's very interesting. Is it same as OpenAI's agreement with Oracle? Why is OpenAI announcing so many agreements recently? They're just trying to grab everything that they can. But yes, I agree. Cooper hit it on the head. No, Oracle isn't giving away any equity, so no dilution with Oracle. It's just tough, though, when you have like a stock go up 30% or 35% in a day. It's just like, to be able to justify that, you're talking about like billions and billions of dollars of value. Yeah, it's just, it doesn't make sense. Pratier Shaken, do you mind giving live analysis on STZ earnings and what you mainly focus on while reviewing? Sure, let's go for it. So, and full disclosure, I haven't actually dug into the earnings as of yet, but let's do it live. We'll do it live. All right, here we go. All right. Okay. So I didn't listen to the earnings conference call. Let me share my screen. Let's see. Come on. Here we go. So the stock's up 3% after hours. Just an FYI there. Now, they did lower their guidance again, so that's no bueno. Okay, leading beverage and alcohol company reported today 2026 results. All right, let's go see the earnings presentation. I think I have to share this. Yes, I have to share this. This UI UX is a little annoying. All right, so Constellation Brands coming at you. Bam. All right, so this is their earnings presentation deck. So let's look at it live, real time. This is Constellation Brands, they reported after the market closed. I did not listen to the presentation. All right, so takeaways. So the beer business, people are still drinking beer. No surprise. I hate these stupid AI bars that pop up. All right, so beer business, high single-digit net sales decline, low double-digit operating income decline, 200 basis points year over year. I got to zoom in a bit, sorry. Affirm's recently updated fiscal year 26 outlook on net sales to decline 2 to 4%, operating income to decline 7 to 9%. That's just the beer business. All right, so let's look at the wine and spirits business, which, by the way, is like not that much of their overall business. Double-digit organic net sales decline, triple-digit operating income decline, operating margin contraction from 18.1% to negative 14.6%. Continue to expect fiscal year 26 outlook on organic net sales to decline 17 to 20%. Holy Moses. And organic operating income. This is organic, though, so let's pump the brakes 1 second. Enterprise updates. Fiscal year 26 reported EPS outlook to 986 to 1016. Affirms recently updated comparable EPS outlook of 1130 to 1160. Affirms recently updated targets for operating cash flow and free cash flow. All right, so these are keys right here. So they're reiterating their cash flow targets. That's huge. So all this organic blibbity blobbity doesn't really matter as much if you're going to generate the appropriate cash flow. Maintain net leverage at target of 3 times. Declared dividend of 102. This I like. I like this. They bought back $300 million in Q2, bringing total year to date 604. This is what you want to see. You don't want to see companies buying back shares as the stock is ripping. The stock is tanking. They're buying back tons of shares. All right, good. So they're focused their capex on brewing capacity. All right, so let's see what else. Delivering against our strategic initiatives. All right, Pacifico is going to come up with an 18-pack. Hooray. Corona Sunbrew Citrus Cerveza. New beer brand and dollar sales. Corona NA, I know that's really popular. Dollar share gainer in NA beer segment. Modelo Oro, a 24-pack. All right, so this is the depletion. This is the decline. Modelo Especial, 4% decline. Corona Extra, 7% decline. Pacifico, 14% growth. I personally like Pacifico, especially if I'm having tacos. Victoria, wow. Victoria's up 19%. It's so weird. The last 2 weeks that I've been driving to Rutgers, I'm dead serious, on Route 18, there's been a Victoria truck in front of me. Like literally the last 2 weeks. It's just bizarre. 2 weeks in a row. Returning capital to shareholders. This is very important. Share repurchases, huge. So they're buying back shares as the stock comes down. Net benefit through efficiency and cost optimization initiatives. So they're taking advantage of this, time of the winter of their beer business. They're tightening up things on the cost side. They're buying back tons of shares. So these are good things. Let's see. Net sales reported versus comp 2481, 2481. Organic net sales. Operating income loss. All right, so less than expected. Net income, less than expected. Adjusted EBIT, slightly less than expected. Okay. Yeah, beer's in the tank. All right. Okay, here we go. Beer business, price and mix. Wine and spirits business. So let's see. Reported 2.5 billion, down 15% versus 2Q25. Organic 2.5 billion. So just so everybody's aware, when they say organic, what they mean is comparable, because if you buy a business, that would not be included in organic. So you have like new brands or anything like that. So they divested a bunch of their wine and spirits business. So you want an apples to apples comparison. So when they say organic, they're talking about excluding the divestitures. Beer business is not that bad. I mean, to make it sound like no one's drinking beer ever again. Operating income. Okay, so let's see. Volume, price, mix, cost of goods sold, marketing, other SG&A. Okay. Wine and spirits business. Yeah, the wine and spirits business is such a small component of the overall business. I wouldn't even care. And they had a huge divestiture, so I wouldn't even really look at that, frankly. All right, here we go. The outlook. Enterprise, 6 to 4% organic, beer 4 to 2%. I'm going to be updating this too, by the way, so I'm just trying to look like real time because Pratyush asked about it. Full year 26 outlook, 1.3 to 1.4 billion of free cash flow, and they did 1.1 in 2Q. That's interesting. They're still doing the capex. Diluted shares outstanding 176. I mean, they bought back $300 million worth of shares in the quarter. That's very good. All right, here we go. Fiscal year 26 guidance. Let's see. This is the beer business. That's 86% of the overall business. That's why they're looking at that. So sales, 2 to 4% decline. COGS up low single digits. Packaging and raw materials, 55 to 60% of total COGS. Logistics, 15 to 20% of total COGS. Depreciation, 4% of net sales. Marketing, 9%. Other SG&A, 5%. Operating income decline. Operating margin at 38% is still incredibly solid. They actually have some of the best numbers in the industry. So the industry is getting kind of hammered. But, pun intended. I think they're really honestly managing this as well as could be hoped for. Let's see if there's anything else here. Yeah, defined terms, blah, blah. Let's see. Volume, cadence. Yeah, I mean, I'm looking at cash flows. That's the real key. And they're showing all of their historical numbers that you could compare. I mean, when you're on the fly, you're just trying to look at like big ticket items. So look, their cash is up. I like seeing that. Accounts receivable down. Inventory flat. Let's see. Borrowings down. Like, so debt is down. If you look over here, debt is down. Long-term debt up. So that might be a wash a little bit. Now, it looks like overall debt is down. That's a positive. Yeah, so I mean, you try to look at individual items here and see if you can kind of tease stuff out. But I have to update this model. I mean, look, we expected it was going to be rough, but I mean, look, right here, you have net income is positive versus the same period last year was negative. But the bigger adjustments in terms of a cash flow perspective are down below. So changes in inventories, prepaids, contracts, liabilities. So that's where the big adjustments are. But net cash from ops, 1.5 billion versus 1.9. Not the end of the world. Looks like they pulled back on PP&E, 410 versus 703. And then payments of long-term debt. So they're paying down debt. They pay their dividend. They've been buying back shares like crazy. So they ended up still creating cash after all of that stuff. I mean, look, at the end of the day, you have to consider the long term. Are people going to like stop drinking beer forever? No. They have a few kind of demographic issues as it stands right now. I think that's kind of like the bigger thing with them. But and also we're going into the winter. Their beers are kind of more like summery. You got football season that they got that going for them. Um, but I would say I know that the stock's up 3% after hours. I'd have to go a little bit more granular, but like their operating margin's still solid. They bought back 300 million of shares, so that's good. They're trying to weather the storm. But again, I would have to go like into a lot more detail. But those are the types of things that I'm looking for. I was gonna buy. I was gonna top off my position before they released earnings, but then I thought to myself, it's like, what's the worst that could happen? The worst of the two scenarios is it goes down more, and I bought in, so I don't care paying up a little bit because I'm reducing my cost basis. I think I'm at 162 on Constellation Brands. Yeah. Um, yeah, that's true. I think that's like a demographic thing. So like Gen Z is drinking less, boomers are drinking more. So I mean, look, if you've ever like walked past a bar, it's not like they're hard up for business. I see a lot of people still drinking. Um, I feel like I have to do more research on AMD. Yes. Um, Maybe we should wait for AMD Q3 earnings. See, the thing is, this announcement isn't even going to hit for another year. So it's really more a function of like looking and seeing what the research analysts have to say about it, because it's not like clear what the ultimate impact is going to be. It's like so amorphous. It's like 6.1 gigawatts. It's like, okay, what does that actually like translate to in terms of dollars? The one analyst said like 10 billion by 2030. It's like, okay. In the past, you've mentioned buying into VOO for your retirement accounts. Yes. If you have dry powder, would you be buying into the S&P 500 at this time? What would be the alternative? So, like, you never stop buying into the S&P 500. It's like every 2 weeks that you get paid, you put money into it. Somebody last week was asking, about like VOO, if you had like the 7,000 for your IRA, would you just dump the whole thing in? To which I said, no, I wouldn't. What I would do is like still dollar cost average. You have like a liberation day happen. If you dump it all in one fell swoop, and then liberation day happens, it's like you could have gotten in at a better price. But yeah, I mean, like, full disclosure, my retirement, it just keeps going into VOO. So that's not going to change. And again, if you go, the way I like to, position this is like, when are you going to retire? 30 years. Okay. So go back 30 years and look at like the S&P 500 where it was 30 years ago, and just kind of say like, okay, take that same trend going out 30 years. It's going to be net. You're going to be up and to the right. But I've heard people talk about like last week or the week before, someone was talking about there's like a momentum ETF. I mean, look, just stick with VOO. I mean, just like for context here, just so we can be like crystal clear here, folks. Year to date, the S&P is up 14.85% year to date. Now, like you're like, oh, but today AMD was up 30%. It's like, dude, no. Like, did any of you know like there was gonna be some crazy announcement today, which actually makes no sense because they're giving away 10% of the company? No. So that's the problem. You look at it and you say like, oh my gosh, if I had AMD, it would have gone up 30%, just like the same thing with Oracle. But dollar cost average, VOO, 15%. I mean, think about it. Rule of 72, right? You're going to double your money if it's 15%. You're doubling your money every like 4.5 years. I don't know who would be, unhappy with that. I mean, the historical return on the S&P 500, 10.4% over the last 70 years. Total return, reinvested dividends, No private equity in the 401k. No, I mentioned last week. I don't know if you were around yet, Cooper, but Fundrise. So you can invest in like private assets, and there's certain ones that you don't have to be an accredited investor. But yeah, I wouldn't. I have a self-directed IRA where you can invest in like real estate, like literally like own solid real estate, not like a REIT or something like that. And I have like a venture capital investment in there. It's a buddy of mine, his company, but it's convertible preferred. So it's like I win either way, and I get to choose when it converts. So that's the only one thing that I have in there. But outside of that, like my 401k and all that stuff, it's just VOO, VOO. Once you max out, that's where I say invest in individual stocks. So you have the 7 and the 23/5. After that, that's when you invest in individual stocks. So obviously I invest in individual stocks, but I'm not doing that straight away. It's just crazy to me, like individual investors, people like were like working all day, and it's like there's people who literally their whole job is just invest, and they can't beat the market. But we think we're going to beat the market. It's crazy. But if you focus over the long term, you could, but it's like it's a full-time job, and you don't hit it right every single time, but you got to buy at a discount. You can't chase stuff. And I like my fear in a market like this is that people are chasing stocks, and that's something you never want to do. So we have this weird like FOMO as human beings where it's like, oh, I missed out on AMD. Now you're going to go buy into AMD. Now's not the time to buy AMD or Oracle. You want to get them like, so NVIDIA, if you look at the last video I did on NVIDIA, it was right around $100. I think it was like 97 at the time. And I was like, yeah, it's a buy. It's a freaking no-brainer, like lead pipe lock. But it's like now it's 180. Is it a buy now? Like I don't think so. It just doesn't, the math doesn't work out. That's the whole point. So this was 5 months ago. Nvidia was at 100. I said buy at 100, and I said yes. So that was April 25th. So it was after the whole Liberation Day debacle. Do I think it's a buy now? No, not even close. But that's the whole thing. So you got to remember, like you're talking about something that's trillions of dollars and it increases 80% in less than 6 months, 5 months. I mean, that's just like, it's insane. Like that's crazy. Like that would be great over 4 years, let alone 5 months. I mean, that's just wild. Da, 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 da. Something I came across is that rather than dollar cost average into VOO, I read to go all in with cash position in one shot for the long-term performance. Yeah, there's research out there that is more advantageous than dollar cost averaging. But again, it's like it all depends the time frame, right? Because if it's going up and to the right, yes, then you should. But the reality is it kind of goes like that up and to the right. But like let's say if you had just dumped the whole thing in, let's take a look, friends. So right before Liberation Day, let's say you dumped everything in then. All right, so let's say you dumped it in at 61, 61.30. You would have missed out on when it went down to 49.83. So you would have had basically 2 months that you could have dollar cost average and gotten in at better prices. But yes, I've read similar research. But even at the beginning of the year, like that's when I'll throw 7K and then I'll still allocate it over time. But the funny thing is, even when you're doing that, like when it's an up day, you always feel a little weird buying it. You're like, oh no, I should wait for it to be a down day. And it's like, it doesn't matter. And again, it's over the long term. Nice. You're quite welcome, my friend. I'm a man of the people. I'm here for all of you. And I genuinely enjoy this. Like, my favorite time when I teach is after class. So I stop the recording and then we just like BS about like whatever, the market, life, questions, the stuff like that. That's the interesting stuff. That's the most fun part. Although like we were doing a DCF this past class and people were getting in like really hardcore detailed questions, which is great. You know, at least people are trying to figure out how to do a valuation rather than just like, oh, it's a line on a chart. It's like, okay, there's actual value. Like someone was asking me about gold. They're like, what do you think about gold? I'm like, what do you want me to think about it? It has no cash flow. It's a hedge. You know, it's like, what do you think about Ethereum? You know, it's not what you'd want to invest in to like get the best compounded return. Do you have any thoughts about the 10 years bond performance? So if you look at, so there's the 10-year, the 5-year, and the 30-year. So you have FVX, TNX, and then TYX. So you have to remember, there's an inverse relationship between price and yield, okay? So as yield, which is the market rate, goes up, all right, the price goes down. So when you look at like the performance, the question is it the performance on the price or on the rate? So when you look at the quote, okay, the quote for TNX is the rate, okay? That's not the price, the underlying price of the bond. But if rates are going down, okay, there's an inverse relationship between price and yield, right? So if rates are going down, price will go up. So with rates on the decline, you'd actually be better off investing in bonds. But in terms of like the term structure of interest rates, they're still projecting a bunch of cuts. There's all these different, you know, postulations, like there's going to be 5 cuts, there's going to be this many. I always think that's like hysterical because it's just like so obtuse and open-ended. But yeah, the 10-year, I mean, like it's a like a barometer for, you know, the market and like the economy, but you want to look at like the TED spread, which is the 10-year and the 2-year. But everything's going from a yield perspective, everything's going down because rates are going down. So I not a big fan. Don't drink the Gatorade Zero. Yeah, I know. It's got Ace K and acyl sulfame potassium, and it causes cancer in lab rats. I know, it's bad. It has sucralose too. Don't worry, I don't like mainline this stuff. I'd rather drink coffee, but if I drink coffee too late, no good, man. I used to be able to drink like a double espresso, like right before I go to bed, go right to bed. Not anymore. No, can't happen. It's weird. It's weird. I'm not even talking like that long ago. It's nuts. Dude, nitro cold brew? Are you kidding me? I love nitro cold brew. So here's an interesting thing. So that's like the only thing I'll get at Starbucks. I'll get the nitro cold brew. Absolutely love it. But I have a fun fact. So I was driving around and I had a gift certificate for Dunkin' Donuts. So I was like, let me try their cold brew. Now, full disclosure, this wasn't like a nitro, but it was just like their regular cold brew. Dude, that is like very underrated. And I'm not a huge fan of Dunkin' Donuts hot coffee in general, but nitro cold brew, absolutely love. Absolutely love. Love nitro cold brew. Do you have a Discord channel? I do not have a Discord channel. I have a school community, but I do not have a Discord channel. I guess my whole thing is like there's too many like things to keep track of. I feel like a cat with a laser pointer. So it's like someone's on Instagram, someone's on YouTube. It's like I'm only one human being. You know, I'm not like Mr. Beast where I've got like a team of like thousands of people. It's like literally like me, like responding to the comments. That's why I always get a kick out of it when people are like, "You're a moron. You don't know what you're doing." It's like, thank you. Have a nice day. Ken, why are you going to Starbucks? You trying to kill my short? Ha! I'm definitely not drinking enough to kill your short. Trust me. Yeah, Starbucks is an interesting one. I still don't understand like what the whole logic was going in, like going so hard into China. And it's just like, when I think China, I don't think coffee drinkers. Like, it's just like the last thing I think of. I think tea, but it's like you're trying to change like a whole culture into drinking coffee. It was just like, it was such a bizarre thesis. And obviously it's borne out. Um, yeah, there was, when I was at the hedge fund, we had, we also looked at Starbucks as a short candidate for the same reason, but we were looking at it on a per square foot basis, like with all like the people that just like sit there and do nothing and don't buy anything. You know, you're really wasting square footage. That was our thesis at the time. All right, so let's see. I feel like if I drink nitro cold brew, I start levitating. Yes, it's intense. It's definitely stronger. There's no doubt. Oh, you entered into bull today. Yeah, bull and what was the other one? TTD. Down another 5%. Let's see where they're at. All right, where's bull at? Where you at, bull? I'm gonna look it up right here. I'm on a FinViz kick right now. Wow. All right. And I hate technical analysis, but there's like this huge candle that's like right in the middle of the screen, which is just kind of oddly fascinating here. All right. So let's see what the analysts have to say about Webull. Nobody covers it. Initiated 19. Wow. Okay, that's a 50% discount right there. And Northland 18. Yeah, those are two pretty good numbers right there. 1371. Analysts are pounding the table on this one under the radar crypto stock. I wonder what it's called. They reported 2Q25 results. See, when I click that, it doesn't show the new screen. So hold on, this is very annoying why it won't show it. All right, here we go. Webull. Total revenues 46% year over year. Holy Moses. Fueled by robust growth in user engagement, customer assets increased 3 straight quarters of operating profitability. Delivered strong business results. I don't know why the stock wouldn't rip as a result of this. Adjusted OPEX. Let's see how that looks from a search perspective on vidIQ. I'm curious, because you guys have mentioned bull a few times. Let's see. Bull. It's definitely an awesome ticker symbol. There's no doubt about that. 55. That's not a good number. Let's see. Yikes. Bull stock analysis doesn't come up. I think people are confusing it with like bull market. Bull stock Webull. No, that also doesn't have a good score. Webull has a good score, 68. OPEX increased 37%. Total revenue increased 46%. Okay, adjusted OPEX. Oh, I think my issue with them was they had negative EBITDA. Okay, see, this is where I say, what? In the second quarter, we raised proceeds of over $200 million from the exercise and redemption of all outstanding Bulls incentive warrants issued in connection with the closing of our business combination with SK Growth Opportunities Corporation. Oh boy. Yeah, see, the devil's in the details with this stuff. So if they're just like, if they're making a ton of acquisitions with equity, that wouldn't necessarily be the best thing in the world. Subsequent to the close of our second quarter, we also announced in July our entry into a standby equity. Danger, Will Robinson, danger. So they have a standby equity purchase agreement allowing us to access $1 billion of capital. I love how they make it sound like it's in the refrigerator. Like, hey, go grab the cookies as much as you want. $1 billion of capital. Okay, so what they're basically telling us here, friends, is they're going to dilute the bleep out of shareholders. And that's my guess as to why this stock is not really ripping so much. But I want to look at the numbers down at the bottom. Let's see. Because if stock option compensation expense, hang on. I need to see the shares. Hang on. Now you guys have got me going bonkers on this. I gotta see these shares. Hold on. All right, so let's go here. Bull. B-U-L-L. Come on. Here it is, Webull. I'm very curious if... hold on, let's see. Balance sheet. This is my fear. Are they going to show the shares here? Book value per share, tangible, total shares. Yeah, okay. I found the culprit. All right, hang on. Wait till you see this. Wait till you see this. All right. Now we've got some clarity. All right, so let's look at the bottom. All right, so first off, up top here, you see this is December 31st, 2022, 23, 24, and then June 30th, 2025, the most recent quarter end. All right, and I want you to look at, wait for it, total shares out on filing date, 40.4, 40.8, boom, 461.5. So the share count 11x'd in 12 months. That's not good. And then 484, it's like, hey, why don't we pop it another, I don't know, 5% from there? So that's what's going on there. There's pretty significant dilution going on there. And I'd have to dig into those deals that they were talking about. But yeah, there's the devil's in the details with that stuff. Something is afoot. You're going hard, man. 12,500 shares. Okay. Let's see. Huge shift to drive-through lanes and pickup orders, grab-and-go jewelers. When the hell is the company spending $150 million on store renovations? Your guess is as good as mine. That's going back to Starbucks there. Hypotheticals. I love these. If you had to start your career again in this market, what banking group or product group would you choose? Good question. Leverage finance. I would choose leverage finance. Investment banking, leverage finance. You'd have so many different opportunities there. You could go to private credit. You could go to private equity. Every company is going to need debt at some point. Although, M&A is a good background as well, but M&A kind of ebbs and flows. So when you have like a strong M&A market, it's like bonkers. But the M&A market kind of ebbs and flows. Like sometimes there's more M&A activity and sometimes there's less. But leverage finance, like companies always need debt. So I would say leverage finance. But also, if you're talking about an industry group, I'd still go TMT, technology, media, and telecom. That's the area where there's so much growth right now. So I would still stick with that industry group. But yeah, leverage finance would be the way to go, I would say. What are your favorite websites to analyze stocks? So FinViz, which is the one I've showed a few times. CapIQ is not free, but I do like that. But in terms of just websites, I'm a huge fan of FinViz. It has like for something that's free, it gives you an awful lot, a decent amount. Clearly, people want a faster, easier, more inexpensive coffee, not more ambiance, as they're in the store for 20 seconds. Yeah, I don't understand why Starbucks would be spending so much money on store renovations either. It's baffling. I mean, honestly, like I got the Starbucks app to just like grab stuff and like grab it and go. So like I'll place an order and then just like pick it up and go. I don't like hang out there. Although if I were going to like sit and drink a coffee somewhere, like, I could see that, but there's usually not like a big like contingent. It depends. Like when I'm in New York City, I've noticed like a lot of people just kind of like hang around the Starbucks. But I'd say like other areas of the country, not so much. It's not like a destination spot. So if they're allocating it more towards like cities, I would say, but I don't know. Starbucks is so weird because I can think of like certain like suburban areas where it's like in like the middle of the town and like people congregate there. I'd say maybe malls, but there's a huge Starbucks in the Port Authority bus terminal in New York City, and nobody's ever there, like at all. Like grab and go. Psh, nobody ever hangs out there. Um, see, I believe you that Webull has the best platform. I just haven't personally. See, like, here's the thing. Like, I'm looking at numbers and fundamentals. That's not taking into account like UI UX, like the user interface, the user experience. Like, it's not taking into account any of that stuff. So there always is going to be that, other like qualitative aspect of things. So like you could look at the numbers of a car company and be like, have you ever driven the car? It's like, well, no. It's like, well, if you drive it, you'd love it. There's something to be said for that, for sure. 100%. Ha. Pratyush, I could never short a company. Market has much more patience than me. The only time I would short is if there were a catalyst. That's that's the key. Like that they're over levered and they're gonna blow their covenant within the next quarter. Like then I would look to short. Um, I love Levin reading the S&P primer currently. Yes, that is a very good resource. Very good resource. Do Rutgers alumni have access to Cap IQ? No. Mergent. Um, that has a ton of information too. We've covered that before. That's a good resource, and they also have research there as well. That was just a commercial. I get my point actually was that I cannot understand how Hood is better rated. Therein lies the question. Yeah, so Hood just absolutely went like bananas. Sometimes it's weird, like investors just pile into something and there's this like positive momentum that hits. Um, so sometimes there's a short squeeze. Actually, Hood, I'm curious, because that's one that would make sense that there'd be a short, like a significant short at this point. But I don't know. Because again, it's like what is the logic of this business just ripping the way that it is? It doesn't. Again, it's like Coinbase. Everybody goes freaking bananas with Coinbase. It's like Coinbase makes money when you buy crypto, not the price of crypto goes up. It's like so bizarre how people can't put two and two together with that. Nah. So I'll show you the Robinhood short interest. It's really not that much. Probably because they get freaking annihilated. Here it is, Robinhood short interest. So as a percentage of outstanding shares, 1.53, not much at all. So it has increased, but I mean that's not a big short interest. It's increased substantially, like almost 30%, but not a huge short interest in the grand scheme of things. Yeah, the I couldn't explain Robinhood to you either. It makes no sense. It's like Coinbase. They make money by people transacting in crypto, so it's like bizarre to me. It's not affected by the price of crypto. It's not like they're like MicroStrategy where they own like billions of dollars of crypto. It's not the case. It's literally just a pure brokerage play. And then people talk about, whoa, what about stablecoin and government and this and that? I'll just like throw out like all of these like random like buzzwords, and it's like, yeah, it's still a brokerage. And also, I the competition. Whenever I've looked at the competition, it's like it's vast. There's not even nearly as many like stock brokerages as there are crypto. I mean, crypto, there's like literally dozens. It's just crazy. Do do do. Ooh, here's a good question. Any predictions on tomorrow's Tesla product announcement? Um, I think it's probably going to be something robot related, is my guess. Like they're going to have a robot come out on stage and like dance around and stuff like that. That's my guess. But that's the only thing that would be like super impressive at this point. I saw like there was an article that said sales in Germany were down year over year, blah, blah, blah. But I think that's all like a head fake. The electric vehicle space, I think self-driving cars, full self-driving cars, the robo taxis, like that's really where the business is headed. And people kind of confuse that. I think humanoid robots and full self-driving cars, robo taxis, that's where it's just going to go bonkers. It's going to go absolutely bonkers. Can you talk about your portfolio? Yeah, sure. So the like stereotypical value plays that I have are Albertsons and Constellation Brands. Those are the like the Warren Buffett value investor, dyed in the wool. Like these are trading at a discount, but that's not the bulk of my portfolio, thank God. And then it's like every time I talk about it, it's like I always feel guilty. Joby. Is Joby the biggest? No. Tesla is my number one position. Then Microsoft, barely outpacing Joby. Joby is like such an enigma. I did not buy it based on fundamental analysis. I didn't buy it based on a DCF. I bought it based on the likelihood it could be 100 bagger. And thus far, it's proven to be almost a 5 bagger for me. And I was like, oh, this was another weird one. I was like, oh man, I bought that a long time ago. And it's like, no, I bought it in the spring of 2024. I haven't even owned it that long. And it's just gone, that one's like gone bananas. That is my biggest dollar gainer. Let's see, percentage gainer. And biggest percentage gainer. Yeah, that thing's 4x'd and changed. Tesla's right behind it. But in terms of actual total value, hang on, I'm looking at the stupid gain stuff. Market value. Hey. So we got Tesla is number 1, Microsoft number 2, Joby number 3, CrowdStrike. I had bought CrowdStrike when the outage happened, and that's done really well. That's more than doubled. VOO, VOO, right there. Let's see, 1, 2, 3, 4, 5. HHH, that one has done pretty well. Yeah, it's up 24% since I first talked about it. Google, GOOGL, Celsius, Meta, which I think that one's still undervalued on a relative basis. Amazon, Costco, which I want to do a valuation on, but no one would watch the video. Rivian, and then in the basement, Constellation Brands, Albertsons. But then also, these are just positions that I haven't filled out as full positions. MasterCard and Berkshire Hathaway, of course. But MasterCard is an absolute cash machine. That's one that I've been meaning to do a video on, but the reality is no one will watch it, so because no one's searching on it. But it's weird. It's like the when I did the Microsoft video. Microsoft's a phenomenal company, like phenomenal company. They're gonna win the AI arms race, absolutely crushing it. Nobody cares. It's just like bizarre to me. I don't understand it. But Visa and MasterCard, if you could buy those at a discount, total no-brainer, man. Total freaking no-brainer. I mean, they're like literal cash machines. It's just insane how much cash flow these companies generate. It's just mind-boggling. So those are businesses. Actually, Karan was asking about like businesses outside of tech. Those are the businesses like MasterCard, Visa, just like buy them when they pull back and just hold on. 100%. Oh, okay. So it's a new Model Y that's cheaper. They just announcement. No robots. Do you have any CBD related? I know that's like a Tilray question. I do not. I'm not opposed to, people exercising their right to, you know, do various substances. It's just such a fragmented market. I don't see like a real leader in it. So it's not something I'm interested in. And ironically, stupid Constellation Brands decided to get into that market, and it was an unmitigated disaster. They lost hundreds of millions of dollars. Yeah, Albertsons is just, it's one of those things where it's an enigma. Like Warren Buffett loves stocks like that. Like on every single fundamental basis, great company, undervalued, the whole nine yards. But I think part of the thing that's going on with them is it's when you look at crypto and you look at AI and you look at all this sexy stuff out there, no one wants to invest in a grocery store. But it's at a discount to like the low valuation that Wall Street has. So Wall Street's low on Albertsons is 19. The median is 24. All right. It freaking closed at 1680. Okay. So let's just do simple math, friends. 19 over 1680. That's a 13% discount in terms of like the worst case scenario. If I did 24 divided by 1680, which is the median, that's a 43% discount. No one wants anything to do with it. It's bizarre. But that's one I think I'm going to top off. I didn't want to like increase any exposure to it, but it's just like, it's stupid cheap now. It's stupid cheap. Hold on, what is this? CGC. Let's see. CGC. Combined Contracting Group. Is this the right one? CGC, it's on like the Korean stock exchange. Does that sound right? Combined Contracting Group. This can't be it. CGC. CGC. CGC Inc. There's Canopy that comes up as weed on the Toronto Stock Exchange. There's one in Canada. I guess it's Canopy. Yeah, Canopy is the one that stupid Constellation Brands bought, and then they dumped it. It's just such a fragmented space. That's the whole thing. Oh yeah, okay. So Canopy Group. I mean, it's kind of like alcohol. It's like how much can you actually like do? It was funny. So I took this class in college. I minored in philosophy, and there was this class called Drugs and Rights. And the professor, his premise was that he thought all drugs, even like hardcore drugs, should be legalized. And I remember like we started talking about weed, and I like somebody was like, it's crazy because like it's so healthy for you and it doesn't cause cancer. And like the professor was like, hold on a second. If someone smoked as many like weed cigarettes as people smoke normal cigarettes, you definitely get cancer. And the guy was like totally crestfallen, the student. He's like, what? All right, let's see. Uh-oh. A lot of bubble talk lately. What are your thoughts? These OpenAI deals with Oracle, AMD don't feel right. So I agree with you 100%. I would not want to invest in AMD or Oracle right now. Now, does that mean that the overall market is in a bubble? No. We were just talking about Albertsons. Albertsons is the furthest thing from a bubble. Maybe bubble gum on the bottom of someone's shoe. But net, I don't think we're at a bubble. There's definitely a lot of frothiness with the like AI related stocks, but if you look at some of them, like my whole thing is this: there's sizzle and there's steak. Okay, like as long as there's a steak there, I'm fine with the sizzle. And when you look at, like, I looked at Microsoft. Microsoft is actually showing demonstrable gains via AI. Same thing with Google. So when I see that, like, we're investing in this and we're getting a return on our investment, I'm okay with it. The Oracle thing, the AMD thing, like we were looking at it earlier. AMD, one of the analysts said that they'll have like an extra 10 billion of revenues by 2030. So okay, that's 33% more revenues because right now they have around 30. So that gives them 40 by 2030. It's like, okay, that's phenomenal, but they're also giving away 10% of the company via warrants. So like, and again, I still don't like, I can't wrap my brain around like CPUs. Like CPUs. Now I know the deal involves GPUs, blah blah blah. But again, it's like I have, ironically, I have a laptop that has an Intel CPU. I mean, it's like, how many laptops am I going to buy for the rest of my life? Like, not that many. Like, I don't, it's like, I can't, the math doesn't add up for me. But then when you see like the data center that Microsoft has in Wisconsin has 100,000 NVIDIA GPUs. And they're just continuing to build these data centers everywhere. And then I don't know if you guys saw, I think it was over the weekend, there was a conference or something last week. Jeff Bezos said that he's going to be building AI infrastructure in space to harness the power of the sun. Like, when I hear stuff like that, like my brain melts. I'm like, "Bleh." Like, I just like, it's beyond me. Like that, like, Warren Buffett says there's yes, there's no, and there's too difficult to understand. That goes into the too difficult to understand bucket. Ooh, what are your thoughts on Klarna? So I can tell you from personal experience with Klarna, they've changed their terms pretty substantially. It used to be that Klarna would offer financing of up to 48 months for $10,000. Now they've moved it down to 24 months, $3,000. So there obviously must be enough defaults going on that they've changed that business model, but then also that's going to ratchet it down pretty significantly. But the weird thing was, buy now, pay later actually doesn't have worse default rates than credit cards. Credit cards still have worse default rates than buy now, pay later. Why? I don't know. I know most buy now, pay later is definitely with Klarna. They debit your account. So with a credit card, they're depending on you to pay. With buy now, pay later, they just debit it from the account. So maybe that's why it's not as bad from a default perspective. But I don't know. It's a good question. Ooh, you must have ESP. What price do you think Meta will reach in the short term? How about I tell you on Friday at 6 a.m.? I'm actually working on that right now. Surprised. It's definitely trading at a discount. Wall Street has it at like an $880 to $900 valuation, which I was pretty surprised because when I looked at my old video, I had it like in the low to mid 700s, but like their numbers, that's another example. That's a company whose numbers are really coming through with all the AI stuff. And it's 97% of their business is advertising. Advertising is like, the costs associated with it are nothing, but they keep whizzing their money away in the stupid reality labs. So that's the problem. Yeah, Klarna and Affirm are basically the same business model. I heard the whole thing like something blew up with Walmart. Yeah, I mean it's so goes one, so goes another. So John, bubble in the AI stuff specifically, yes. I think you have to be very careful with investing in like an earlier startup type company. I would want to get exposure to like a Microsoft, an Amazon, a Meta. I'm fine with them, but I think people are erroneously thinking that there's an AI company out there that nobody knows about that's going to be the next NVIDIA. Like, I don't see that. I think you have to have the scale benefits. That's the real key. How are you feeling about Tesla? What point would you consider cutting your position? Like, what is Waymo getting regulatory approval? Oh, hold on. Or like 3 years goes by and no real progress on humanoid robots. When would you sell? That's a good question. It's hard to bet against Elon Musk. I mean, that's the whole thing. I know, oh, he's a fascist, all this other idiocy, but dude, guy's a visionary. You know, PayPal, then Tesla. I'll say Tesla first iteration, the EVs, but the XAI I'm like meh on, but the humanoid robots and the self-driving cars, that'll literally be like a massive game changer. But yeah, I would say several years would have to go by for me to kind of like sour on it. But right now it's just there's so much testing going on. They have humanoid robots working in their factories. You know, so though that's like right there, it's just it takes time. But from a scale perspective, they could destroy everybody. They could destroy everybody. AT&T just did a nice correction. AT&T has ripped over the last year. That one's a shocker because like that's been dead in the water. It had like an 8% dividend yield and then just like phew. Yeah, the AI stuff is so hard because you know what it makes me think of? Okay, I don't want to scare anybody. It sounds very much like the internet bubble. The difference though is like with the internet bubble, there are companies that had like no business at all whatsoever that were getting these like insane valuations. So I don't get that vibe, but I just feel like the potential is just a lot more potential than actual. But that's why like I'm more so in terms of like the Mag 7, like they're the ones that are deploying it, you know, the most effectively and efficiently. But yeah, like whenever I hear new AI company, I'm always like very skeptical of that. And again, all you have to do is use ChatGPT, Claude, all these different things. And I know like other people have better access than we do, but it's like when I see some of the results that come out, it's like something's off there. Ooh, controversy. Charlie Munger famously called crypto rat poison. Agree. I would say overall accurate. Bitcoin, no. Ethereum, no. Solana, no. I would say all these like altcoins, yeah, definitely, because there's like nothing behind it. You know, right now like there's multiple use cases in terms of like the blockchain technology for Bitcoin, Ethereum, and Solana specifically. But yeah, I wouldn't be like loading up on, you know, like Crapcoin and all sorts of other altcoins. But if you were going to get exposure, like, look, I'm full disclosure, I have a little bit of Ethereum and Solana. You know, not much at all, but a little bit. But there's there's the blockchain behind it, and there's the use cases beyond just like it being a virtual asset. So big fan of Equinix. So Equinix is one of those companies that is just never cheap enough. So Equinix is a data center REIT. We covered Equinix when I was working at Deutsche Bank in the TMT space. So I think they converted to a REIT later, but that's a company that's been on the radar for a long time, and it's just never been cheap enough. And I haven't looked at it in a while, but why don't we take a look see? But yeah, I'm a big fan of Equinix. I just don't think it's likely to be cheap enough, is my guess. So let's see, EQIX. Yeah, big fan. Yep, 789.84. It looks like it's not as crazily priced as I would have thought. Let's see. Here we go. All right, here we go, Equinix. Here we go. Cha-cha. All right, 789.84. Let's see. Year to date, it's down 16%. I'm kind of surprised. Oh, got downgraded. Initiated buy at Guggenheim, 933, but that was July 10th. That's been a while. 3 downgrades, though. Wolf, BMO, and Ray J. 850. I wonder why the downgrade. Because it's not like it ripped much, but looks like they might have had like crappy results. Because it was 900, it looks like, and then it just dumped, and it's gone sideways for the last 3 months. That's interesting. I'd have to dig into that. In general, yes, I'm a big fan of Equinix, but I'd have to see what happened there. I haven't looked at it in a while, to be quite honest with you. IONQ feels like the pinnacle of bubble. No real revenue and insane valuation. That almost makes me think of Archer Aviation, which everybody's like, what do you think about Archer? I'm like, there's nothing to think about. They don't have any freaking revenues. Like, what are we talking about here? Yeah, this one's like makes no sense at all whatsoever. They got downgraded January 10th, 2025 by JP Morgan. They changed the price target to $9 a share. The company has no revenues. How the hell do you get a price target on it? I'm like, it's bizarro land. I don't get that. Not to call the great monger wrong, but rather poison was never worth $1 trillion. Tell me why gold is worth its weight in gold and crypto can't have value. Let's clarify. I have no desire to short Tesla. I'm just talking reducing your position. Yeah, in hindsight, when Tesla was 488.54, like the high is seared into my brain, November, and then it just like kind of dumped down to like the mid 200s. I was like, probably should have cut a little bit then in hindsight, and it's still not back up there yet. So let's see, TSLA. Camel. It's gotten close. Yeah, 52-week high, 488.54. I remember it vividly, and then I was like, what happened? And then it went down to the low 200s. That would have been the time to buy in that March time frame. Jeez, 225, 212. That's the 52-week low. But yeah, it's on a freaking tear since. I mean, look, I'll just be brutally honest. Do I think it's undervalued? No. But again, you'd have to quantify the humanoid robot piece. I think Kathy Wood and like Dan Ives, like the combo of the two, have come up with market potential for humanoid robots, I think, is 5 trillion, and self-driving cars 7 trillion. So I don't put that kind of stuff in my valuations. It's like I need something that's like more tangible. Gatorade Zero, cool blue. Brought to you by Gatorade. When you're working hard building models and you need to get some hydration, Gatorade Zero. Yeah, I picked it up this weekend. It was on sale. That's really what it is, more so than anything. Usually I'll just like drink electrolytes and water. I'll put like an element pack. I've gotten some other ones too. Element's like a bit much, unless you're like legit dehydrated. What's up, Ken? Been a minute. True. I've been watching over the past month the VIX trend. Ooh, upwards 8 to 9% increase versus the S&P 500, and Nasdaq gaining 4 to 5% in the same month. I believe this in tandem is a concern. So one of my good friends runs a hedge fund, and he always says, when the VIX, what does he say? Is it 20? When it's like 40, if it's like below 15, then you have to watch out because like the market's missing something. But then when it's above 20, that's when, so it's like 15 and 20, below 15, like more so like 10, above 20, like 25, like 25, it's like market's too fearful. But like when it's too low, I'm looking at year to date. So it hasn't really spiked up as much as I would think. Um, I see what you're saying though, that the VIX going up and the S&P and NASDAQ gaining at the same time. Um, that is very interesting. The NASDAQ is just like bonkers right now, all the tech related stuff. Someone was telling me there's like a momentum ETF. Um, and that one's just like killing. Oh, maybe this is, we were talking about this last time. SPMO. Um, yeah, that's 26% year to date. And I think the S&P is like 15, so that's crushing it. But it's a pretty resilient market right now, honestly. Um, it's just, you have to look at the fundamentals, right? Um, that's really what it boils down to. Again, always remember, the market is a leading economic indicator. So the market's telling us what's going to happen in the future. I vividly remember when the financial crisis happened, the market like dumped. Everybody still had their job. It was like another 6 months until everybody got like, canned. So takes time. UNH. Yeah. UNH, man. I mean, I just don't like health insurance. It's just a horrible business. And again, if you're going to hold on long enough, it's kind of like the Intel axiom. Like if Intel makes it, um, you know, it'll be higher 5 years from now than today. But I just don't like the business model. It's just not something I'm really interested in. It's a very low margin, crappy business. There's like no way around it. But it's funny, like when stuff goes down. I mean, like that's kind of what happened with like Lululemon. Everybody's just like, oh my gosh, Lulu, it's down. It must be a good buy. It's like, well, they got to figure out their whole tariff situation, but I still think it's definitely at a discount. I don't know if we're going to see it below 160 anytime soon, but you know, they always do well in the fourth quarter. Their fourth quarter is going to be, basically reported in, the February timeframe. So that's probably when that stock will have a pop. Um, um, oh, I gotta go up. The user interface for this is not good. There's like this really teeny tiny thin scroll bar, and I can't fricking get back up. This is very annoying. Meh. Views on OPEC increasing production. I mean, I think the more interesting thing is I think natural gas will have its moment in the sun because of the powering of these AI data centers. We just, yes, nuclear would be the long-term play, but I think we're gonna have to go old school straight away with this. But increasing production, I mean, I think right now they're probably trying to preempt the need for more energy as it pertains to AI. I mean, $60 a barrel, that's like kind of right around that like break even-ish point, 55, 60. So that's going to move the price down. So I don't know. That one's a tough one. Thoughts on holding precious metals in case of a failed treasury bond auction. It's a hedge, and I wouldn't even look at it necessarily as like failed treasury bond auction as much as it is fiat currencies in general. And the fact that we have so much debt, 37 trillion and counting. The interesting thing is a lot of sovereigns, like countries, are buying gold. And, so I'm going to look at gold specifically. but you have a lot of countries that are buying gold because now it's like, okay, is the dollar going to be the reserve currency moving forward? I would say, unless something unanticipated happens, it should be. But I think you have a lot of countries trying to hedge themselves. Also, let's not forget there's a lot of like geopolitical madness going on right now. We still got Russia, Ukraine. The Middle East is still in flux. Hopefully, that's moving in the right direction. But you know, it's definitely why gold has gone up in value so significantly, because it's a hard asset. So other precious metals, that's where I would say that's going to be more of a supply demand play. We haven't talked about it yet, but like there's been a lot of investments by the government in like different kind of rare earth companies, like Lithium Americas, USA Rare Earth, and I understand the logic. In terms of the need for like battery technology and AI and stuff like that. But that being said, there's just a lot of risk in that. Any type of like mining type operation is very suspect. Now, MP Materials is the one that comes to mind that has just been like on an absolute tear. But that's I think that's a little bit more speculative. Um, have you ever done a deep dive into hymns? So I did a video on hymns a few months ago, and the comments were like so insanely nasty. I was just like, oh my gosh. I mean, I got a value of like, I think like high 30s, low 40s, and the stock was at like 50 something. And I was like, it's overvalued. And people are like, you're an idiot, kill yourself. And I was like, no, and no. So I was like, not doing that one ever again. And the whole thing with the Hims business model is there's plenty of other companies that do it. I think people are more price conscious than anything with that. There's nothing real unique with the business. But dude, you should see. Like it was like Rocket Lab. I did one video on Rocket Lab, never again. It was like it was like posting in an insane asylum. It was just the most bizarre type comments that people were making. And I was just like, you don't understand fundamental analysis. It's just like crazy to me. So here, I'll pull up hymns. Let's see if I can have someone said hymns has to partner with Lilly. Oh, people are talking about the Novo Nordisk deal. How's that working out for you now? Let's see. Yeah, so I was comparing hymns, okay, to Nvidia, okay, and I was making like a crazy claim, like that the multiple on hymns was higher than Nvidia, and someone commented, wait for it, you compared hymns EBITDA to Nvidia, but they're in totally different businesses. That was the whole point, dummy. I mean, like some of these comments are just like, oh my gosh. So I have no desire to deal with like the idiocy. So like Rocket Labs, ASTS, HIMS, not interested. There's like no competitive advantage with that business. So it's like you might as well have a lemonade stand. You know, that's my my 2 cents. If you had to pick three stocks that would be 100 baggers in the next 10 years, what would they be? Right now, it looks like Joby's on its way. 100 baggers in the next 10 years. So the problem with a 100 bagger conceptually is it has to start small. So you can't say like Nvidia, Microsoft, like none of the Mag 7 would fit because they're too big. It's the law of large numbers. They can't 100x from here. So let's see. 100 baggers, 100 baggers, 100 baggers that we've covered on the channel. Rivian, could that get to be a 100 bagger? No, because it's already 16 billion. Like for a 100 bagger, you would need a stock that has a market cap between like 1 and 10 billion. So already from like a structural issue, like that, there's only like so many that would qualify. Let's see where STRL is. STRL. Sterling Infrastructure. Man, that thing's ripped. Go look at it. Like, I'm not a technical analysis guy, but look at the stock. The year to date for STRL, Sterling Infrastructure. It's just like, so they build out data centers. That's their whole business model. So their market cap is 10.9 billion, and they a 100 bagger for no, they're close. They're like an 80 bagger. Actually, they're almost a 90 bagger, 85 bagger over the last 10 years. But that's the type of stock that could, if the AI infrastructure continues the way it is. So I'll go STRL. Let's see what Joby's at. Wow, Joby's already at 16.7 billion. All right, so STRL, that'll be one of them for a 100 bagger. If Joby pulls back, I'd go to that. My man earlier was talking about Webull. What's that at? 6.87. Let's throw that in the mix. It's tough because none of the other stocks that I hold can even like potentially be a 100 bagger just based on their starting point. Ooh, let's see HHH. Oh, HHH more so than any of them. That market cap is 5 billion, and that is what Bill Ackman wants to turn into the next Berkshire Hathaway. So I will go on the record, 100 bagger, HHH. So I'd say HHH, STRL, Sterling Infrastructure. Joby's a little ahead of itself, but that definitely has the potential. But that's at 16 billion. So you want to find something between 1 and 10 billion. That's the challenge. Have you read David Gardner's new book, Rule Breaker Investing? No, I haven't, but I'm going to now. Let's see. Rule Breaker Investing. I'm going to put it on the list. Rule Breaker Investing. Thanks. Always looking for a new book to read. I'll have to check that out, man. Ooh, yeah, ASML. That's one people really like. Best moat in town. See, the problem is that company is in euros only, and I don't think they even have an ADR. Everything's in euros. Like, you have to invest in the Netherlands to get exposure to it. The only other way that I've found that you could get exposure is via an ETF. I was late to the chat this evening. Did you get a chance to watch HHH annual shareholder meeting? I did not. We were talking about Constellation Brands earlier, STZ. But actually, that's something I should put on the old radar. $85. Very interesting. Yeah, so, I mean, look, HHH is... They're changing like their entire business. Like, they're going from a real estate development company to a Berkshire Hathaway type holding company, and that is the whole premise. I did not see the shareholder meeting, but that's something I will check out. Because that's the one thing. It's like, you know, Bill Ackman's talked about it, and if you go on to the Pershing Square website, they have like this big presentation. It's on YouTube. It's like an hour and a half long, and they go into all the mechanics of it and everything. But I haven't gone into detail yet on the annual shareholder meeting, but I'll check it out. Something about Cool Blue. Very good. Maybe it's the dyes. Maybe that's what it is. What are the dyes? Blue one. Blue one. That's the dye. Blue one. Yeah, I don't know if HHH would be one that you'd want to trade. That would just be a hold. I mentioned it when I saw that Bill Ackman was investing $900 million at $100 per share, and the stock was at 65, I was like, whoa, 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 whoa. Like that to me was like the most insane, like thing that I have seen in recent memory. And the only reason that you would do something like that is that you think it's undervalued at 100, ultimately. So I was like, if he's investing at 100, obviously he thinks it's probably worth 140, 150. So I was like, you know, this is a 100% return from 65, which is where I was able to get it at. Now it's 85. So it's worked out. But that's a long-term play. It's only 5 billion market cap. I'm kind of surprised at that. But it's a real estate development company. They own a bunch of land, so there's asset value there. So Costco, I have to dig into. It was funny. I was talking about it earlier. It's I have a position in Costco as well as Berkshire Hathaway, but it's been so long since I looked at it. We were talking about Albertsons earlier. That ACI, stupid cheap, but it just keeps going down and down every single day. That's the type of company that like Warren Buffett would get like a 20% stake in. He would just buy it on the way down. I mean, there's nothing that's going to undo that business model. They do delivery, they do Instacart, they've got a big pharmaceutical business. Like, there's nothing that's gonna get rid of that business from a technological perspective. So it's just bizarre. It's just a very like competitive, low growth industry. So Albertsons, it's not one that I'm going to be updating the video because it's like, throwing a brick into the Grand Canyon. Nobody's searching it. But yeah, that one's definitely undervalued. I'm probably going to top off Constellation Brands and Albertsons, although I didn't go in with the intention of getting more exposure to Albertsons, but that one's like stupid cheap now. When you look at the median valuation that Wall Street has is 24 and the stock closed at 1680. I mean, it's a 43% discount. There's just a point where it's like, this is stupid. But there just has to be a positive catalyst. I mean, I'm actually curious when they report. Let's see, Albertsons earnings, ACI earnings date. Okay, it's actually not that far away. 8 days, October 14th. So next Tuesday, before the market opens. Okay. We shall see. All right, so now we know. So basically a week from tonight, the next day, they'll be reporting. That'll be interesting because it's just like stupid cheap. It like 1680. You're like, what the heck is going on there? Honestly, rating comes and goes. There are specific days. How does it work? So typically the ratings are twofold. One, when they initiate coverage, they'll say like, we're going to start covering this company. So they'll put out a rating. That's agnostic to any sort of date. But outside of that, like if you cover a particular company as an equity research analyst, whenever they, report their quarterly earnings, that's when you update your model and, give a new rating. Also, if there's big news, so I would say, and we read some of them earlier, the announcement today, OpenAI, AMD, every single person that covers AMD is doing an update to their valuation. So if there's big news, they'll create a report. It's usually like a note. They won't have like a full valuation, stuff like that. They'll give a new price target, but they won't give a lot of like details and stuff. Those will usually be like 2 to 3 pages. But whenever they report their quarterly numbers, that's when they end up producing new estimates. And then sometimes they drop coverage of a company because there's just no real like catalyst. That happens sometimes. But yeah, that's how it works. So if you cover a company quarterly, full valuations, I would say, once a year, maybe twice a year, where like they publish the full model and stuff like that, but definitely quarterly, and then any big news for sure. Hey, Professor, what's your perspective on the whole financial engineering concern with AI, NVIDIA, OpenAI, Oracle, NVIDIA cycle? Um, I don't know about financial engineering as much as just like overvaluation. So I guess I see like, yeah, like it's kind of a loop right there. But I mean, look, if OpenAI is actually giving all of this capital to these companies, it's not financial engineering. The thing I didn't like when we covered it earlier was that AMD is giving away 10% of their company via warrants. I like still cannot figure out the logic of that. I guess like if you increase the value of my company, you share in the upside. I get that, but it's just bizarre to me. Like let's do a deal together and I'll give you 10% of my company if the stock goes up significantly. Like that part doesn't make sense, but I don't like worry like financial engineering. I think, John mentioned it earlier. I think there's like the follow through with all of the AI is still remaining to be seen. The only companies where I've actually seen a tangible impact, like literal tangible impact to AI, are the Mag 7. Like Meta's numbers are increasing because they're actually creating more efficient ad revenue through the use of AI. Microsoft increasing as a result of AI. Amazon increasing as a result of AI. Apple not. So like that one I can't figure out for the life of me. But the other Mag 7, you can actually see a demonstrable impact. Tesla, no. Still the EV energy storage company. But like again, you know, AMD, it's a producer of semiconductors. So it's like somebody's got to be ordering more chips for them to get this increase in value. I'm not concerned about financial engineering per se. What I would say, and again, because they're a private company, we don't know, OpenAI is coming up with a lot of capital for a lot of companies. That's kind of the more interesting thing. It's like how many people are paying, you know, $20 a month in order for them to get all of this money. There's got to be some other sources. I know when I covered Microsoft a couple of weeks ago, they invested another 10 billion, but that doesn't get you to, all these agreements that they're doing with all these other companies. So I feel like OpenAI internally has something else going on and cooking in the works beyond just like us paying $20 a month for their service. There's got to be something else going on there. Unless everybody on Earth is at $20, you got 8.142 billion people on Earth. It's like, okay, that's a decent amount of money per month. Crazy stuff. Yeah, but AI, the Mag 7, you could see a demonstrable impact, but it's like any like startup company that's talking about AI, I'm a little skeptical, a lot skeptical actually. Like even, super micro, that popped. Like I literally was working on the video and it popped. It went up like 9%, and then today it's up 5%. But again, it makes like no sense. It's getting an Nvidia bump. How so? I don't get it. So there's certain ones that just make like no sense. The thing with super micro that you got to watch out with is a 1%. Think about this. A 1% change in gross margin is a $10 change in the stock price. So if gross margin goes down 1%, the stock price goes down $10. And then they have a ton of dilution. So there's a lot of wonkiness going on there. And people forget it's a physical product company. They're producing something physical. So that's the thing that you got to be careful with. What part of being a hedge fund analyst shocked you when you first started? Could you give an example of how detailed were your thesis on companies? Did you have access to sell-side analysts to help? So when you're on the buy side as an analyst, you're really like not as, you don't care as much about sell-side analysts because you're doing your own private research. It's never seen the light of day, but very detailed. Yeah. So I'd say probably like one of my more famous models was the one I did on Thor Industries. So Thor was at the time the number two, or actually no, I take that back, a number one maker of RVs on planet Earth, and that's a company that Warren Buffett bought Forest River, which was the number two maker of RVs. Thor's still number one. They own a ton of different brands. That thing was an absolute beast of a model. That model, like I was looking at gas prices. I was looking at how many baby boomers were retiring per month. It was like 300,000 per month. I mean, that thing was just an absolute beast. I was looking at multiple comps, cycles over time. It was pretty wild. It was pretty wild. But you don't look at sell side research when you're on the buy side, not really. But let's see what shocked me. Well, remember, I was there during the financial crisis. What shocked me is like how companies, like whole funds, just blew up overnight. That was the stuff that was really shocking, more so than anything else. And then just the market turbulence. Like human psychology is something that becomes really fascinating when these like crazy markets happen. I remember vividly, like the market was down, like the Dow was at 8,000. And I was like, I'm just going to buy a bunch of the market like via an ETF. And people are like, are you crazy? Are you crazy? I'm like, what? I mean, that's like a 6x return. It's like, but people will tell you like something's crazy that doesn't seem crazy at all whatsoever. I sold my SMCI because of one of your videos, but honestly, you're the only one out there putting the actual math together. Amen and hallelujah. That thing, dude, like, I know you're probably like, oh, I could have made more money. Like, no, like that. You talk about rat poison. There you go. That company is like an enigma wrapped in a conundrum. That company, like, there's so much weird accounting going on there. Not a big fan. Not a big fan. Not only that, but Hewlett Packard Enterprise and Dell can absolutely crush them. And they're not here tonight, but there's somebody like actually commented on a previous SMCI video, and they were like, dude, I literally like do this for a living, and I could tell you that Hewlett Packard Enterprise and Dell like crush like way better. So I'm almost positive OpenAI's plan is to use its AI to sell licenses to companies to help make their businesses more efficient, almost like an all-in-one Adobe, Excel, Salesforce, Power BI, etc. I could see that. It's like we're going to white label AI for you. Like make your own chat GPT. One thing I could tell you is a lot of companies are already doing that. Like I know for a fact in the financial services sector, like multiple clients of mine, they have their own internally generated and created AI platform. So picture like chat GPT, but like customized to a specific financial services firm, like multiple have that. But I could see the potential use case where like they're going to offer kind of commercial licenses or maybe like white label it. But they're going to have to kill some of those hallucinations beforehand. But I could see something like that. That would make sense, licensing the technology. Even if they have higher enterprise subscription revenues from all major companies, still probably a long way from fulfilling all the investments. Yeah. You have to remember when a stock goes up 30% in one day, in a day, I mean, you're basically taking the future and like pulling it back to today. So they have to knock it out of the park from then on. That's the key. That's where you have to be like, huh. I would more rather a company that is trading at a discount today and they're heading up. It's kind of like the point that Cooper was making. At what point do you like trim Tesla? It's like it's getting pretty darn close because you have to see the numbers justify the valuation. And we obviously don't see that right now. Ooh. Do you ever trade leverage ETFs? I do not. There was a classic story when oil was undervalued, when oil was very low. What ended up happening was I was looking at a triple levered oil ETF when oil was like really, really low. This was pre-COVID, before COVID. And what ended up happening was oil just kind of like went sideways and then started going down a little bit. And what happens is they end up doing reverse splits with these levered ETFs. So that's where you have to be like really, really careful, because once it goes under $5, they got to get it above $5 or else it'll be delisted. So I'm not a huge fan of levered ETFs. What I would say is whatever position you're trying to take, you could just do it via options. You don't need a levered ETF to do it. But the levered ETFs also don't give you the exact amount of exposure. So if it's like triple levered up or down, it resets every day. So you don't actually get like a 3x amount. But those are like insane. I would only do something like that, like Liberation Day, and like you're like it's happening and people don't think it's going to happen. That's when you do it. Something like that, where there's like an obvious like time specific catalyst of something, like, and then you take a view, but it's a trade, it's not an investment. SMCI makes a much better product than Dell and HP, in my opinion. That's okay. Liquid cooling technology, I feel it. But it's, even if the product's better, the company, the people running it, it's just like, it's like the mafia. It's very weird. Like it's like super weird. They have these two companies, Ablecom and CompuWare, that are family to the CEO, like literally, and that's the source for the bulk of their inventory and receivables. It's just like a very weird setup. The CEO has borrowed millions of dollars from these no-name companies. It's just like, what? You have to look at the Hindenburg research report when it comes to SMCI. Like that one is just like, it's a scary eye opener. What are your thoughts on SCHD? So I keep mixing this one up, I think, with the momentum SPMO, SCHD. Schwab US Dividend Equity ETF. Let's see, what's the yield? 3.79. You know, the problem with dividend paying stocks, especially ones that they're going to include in an ETF like that, they're typically not growing all that much. So I'd rather be in a company that's not paying as much of a dividend, but it's redeploying its capital and it's growing. You know, if you were like retired, I would say that might be a good idea, or close to retirement. But in general, I like the dividend plays. So like AT&T, we talked about that one earlier. AT&T was at like an 8% dividend yield a year ago. And, you know, a few people reached out to me and like, what do you think about AT&T? It's like, dude, it's a dog. It's not going anywhere. It's not growing. And then ironically, the stock popped, but, you know, it's not like a company that's going to be growing substantially. There comes a point where it's just so undervalued. The market's like, okay, this is stupid. But I'm not opposed to a dividend ETF. That one in particular, I'm not familiar with until you mentioned it. Somebody had mentioned it in one of the you might have been you actually. Someone mentioned it in the previous live streams. But again, that's my whole thing. Like, so let's take a look at SCHD relative to S&P. So year to date, SCHD is up 0.29%, and the S&P 500 is up 14.85%. So you just do the math right there, 14.85 divided by 0.29. That's a 51.2 higher return year to date, S&P versus SCHD. So, oh yeah, UCO. Yeah, so this one's so funny. Oil went to negative 18. So this is the concept of futures, okay? So people think like oil became negative. It's not, that's not what happened. Like what happened was the value of the futures contract that was locking in the price of oil was worth negative 18 because you were losing $18 in that contract. So it wasn't that like oil was at negative $18 a barrel, like oil selling for less than the barrel that it's in. It's like, no, that's not what it is. So basically what happens with a futures contract is you're locking in the future price to either buy or sell an underlying commodity. So if you think about it, if you locked in to pay $50 for a contract for oil and oil goes down to 30, you're losing $20 on that contract. So that's what happened during COVID. So the futures contract was at a loss of 18. It was actually even higher than that. But that's what was going on then. But there was UCO, there's like a triple levered ETF. So let's see, triple oil. Yeah, let's see, triple levered. It wasn't UCO. It was a different one. Let's see, UCO. No, it was one of these pro shares one. I forget what it was, but yeah, that thing was a nightmare. You turned me into a huge fan of HHH. Nice. I've been researching it nonstop. Awesome. I just wish I could turn you on to Brookfield Copart. Yes. So you mentioned Brookfield. Okay. So it was you, my friend. So Cody. All right. So I'm not anti-Brookfield. Trust me. Brookfield, to really properly, and you probably already know this, by the way, I'm telling you something you already know, but Brookfield, to do a proper analysis, like a legit deep dive analysis, would literally take like weeks. I'm not opposed to it, but like if I look at vidIQ on like the search, like Brookfield doesn't even show up on the radar. The proper way to value Brookfield is the same way that you would value Berkshire Hathaway. You have to do a sum of parts analysis. But I hear what you're saying, in that it's, I think you said 19% compounded return. That's one that is just like steady Eddie. I mean, if you look at like the 10-year chart, for whatever reason, I don't know why, but Liberation Day it went down. That would have been a good time to buy it. I don't know how that would affect it. But yes, so I give you HHH, you gave me Brookfield, but that's one that's going to take a decent amount of time to like really dig into. But yes, I'm a fan. I'm a fan. You definitely turned me on. Thoughts on CN? I don't have any thoughts on it. Let me see it. Sienna. Wow, this one's ripped. Holy Moses. They announced the acquisition of Nubis to expand data center strategy and adjust AI workloads. Wow. Okay, I haven't looked at this company in forever, but let's go take a look. Everybody's getting in on the AI game. We were talking about it earlier. Look at this thing. Woo. I mean, holy Moses. This was, so hold on a second. This was September. It's gone up more than 50% in the last month. Call me crazy. Might be overvalued. Again, just throwing it out there. So let's see. September 2nd, 97.12. Oh. And then it just goes bananas. So the E stands for earnings. So obviously they must have done well. They did 67 versus 53 estimate. So the price, 26% surprise. Revenue 1.219 versus estimate 1.175. A surprise there. So bigger surprise on the EPS. Let's see what the analysts say. Performance year to date 81%. That's nice. Rosenblatt, they moved it up to a buy 175. Needham moved it to 130, blew through that price target. So this would be an example, like, again, I haven't dug into this, but this would be an example where it's like, it's a little bit ahead of its skis. But they did announce the acquisition of Nubis to expand their data center strategy and address AI workloads. Yeah, I haven't looked at this company in forever, but it was pretty much just going sideways until September where it decided to go up 50%, which is kind of bananas. Yes, I do know Morningstar Research. I'm a big fan of Morningstar Research. There's actually a really great book that was written by the head. I don't think he's head of Morningstar Research anymore, but little book on moats. Yeah, the little book that builds wealth. Pat Dorsey. Yeah. No, we don't want the preview. This is a great book if you're looking for. Here we go. I'll show it to you guys. So this was the dude that ran Morningstar Research. The little book that builds wealth. If you ever wondered what a moat is, he basically goes into painstaking detail. So it's a little book that builds wealth, and he talks about finding companies with moats. So yeah, this is a very good book. But yeah, Morningstar Research is solid for sure. And they're fairly conservative in their valuations. I could tell you that from firsthand experience. But yes, I know Morningstar Research is very good. Ooh, what do you think about Target? So Target's one that has shown up as a decent value play. Like if you look at their business on a dollar per square foot basis, it shows up as being cheap. I haven't looked at it in some time. Oh, wow. Yeah, that thing's pulled back like crazy. Let's take a look at the Target. And again, this is kind of like the argument, Target, Walmart. A lot of people are saying like Amazon will eventually crush them, but I'm not so much necessarily believing that. So they had a barely positive surprise on EPS and revenue, but the stock pulled back. That's interesting. So it was at like 98, now it's 88. Yeah, this is really pulled back. Let's see. Oh, downgrade, downgrade, downgrade. Everybody's crapping all over Target. And Truist changed their target to 83. Yeah, I haven't looked at Target in some time. I was positive on them. It was pre-COVID. But geez, this has gotten kicked in the teeth, man. Holy Moses. Yeah, this has gotten really bad. I'm actually curious, are there any other? Let's see. Target price 101.93. Says who? All right, so let's see. This is why someone was asking earlier. They're like, what resource do you like? I'm like, FinViz. It's actually pretty freaking robust. All right, average target's 102. High target is 130. The consensus is a hold on Target. But, you know, it's at a 45% discount at 130. The low 80, it's still overvalued. So we got 9 strong buy, 1 buy, 21 hold, 2 sell, 4 strong sell. But the consensus is hold. Yeah, so this is why I'm a huge fan of FinViz, because look at all the information it gives you. I mean, all I did was click on the target price and it gave me all that. Pretty redonk. FINVIZ. Ooh, excellent question. So, why is there a huge discrepancy on analyst ratings on certain stocks? For example, Tesla. Can you talk about the model differences? Absolutely. So Tesla's tough because if you look at the recent performance, so how would you normally do a DCF? You'd look at the 3-year average, 5-year average, 7-year average, 10-year average. When you have a company that's like a super normal growth, it's very difficult. Like Nvidia is very difficult to value on a going forward basis because coming up with those projections is really challenging. Now with Tesla, recently you had a pullback on the EV side. They've actually had like decent sales in Scandinavian countries. You've had a pullback in the US. So now it's like, how do you kind of like amalgamate that? So let's say you have 8%. I'm more bearish. I have 4%, and somebody else has 15%. That's how you get such a massive difference. Like you're not going to see that big of a gap with like Albertsons. Like the low is like 2% revenue growth, the high is like 4% revenue growth. But once you start creating that wedge where there's a massive variance in growth, kind of think about it like this. If you were throwing like, I always use this example with like terminal value. Like if you ever see an exit sign, right? And I say like, I'm going to hit this with like a baseball, right? If you're off by like 1% and you're pretty close to the sign, you're still going to hit it. But if you're off by 1% and it's like, 100 feet away, like you're going to be way the hell off. So that's kind of why you have these big variances and these big differences. I think also what a lot of people are doing with a company like a Tesla is, like Dan Ives from Wedbush. He's like a big tech analyst. Someone like him, he's saying humanoid robots, self-driving cars, and he's taking the value of those like industries and that potential and saying like Tesla is going to penetrate this huge market potential. So that's why he has a value that's like magnitudes different than the rest of Wall Street. And then you have other people that are just kind of like focused on the EV business. And then you have other people kind of like me who are like, okay, yeah, the EV is one piece of the puzzle, but I like this energy storage and generation business, which is growing at leaps and bounds. I still think right now it's overvalued, but that's how you get these like this huge variance from one analyst to another. And I think especially with those tech stocks, like a Tesla, CoreWeave, companies like this, where it's so amorphous as to the potential market, that's where you're going to have this massive variance. So if you have like a difference 2 to 4%, you extrapolate that out, it's going to be here. But if you have a difference from like 4% to 20%, now you start creating that wedge, you're going to get these massive differences in valuation. So that's pretty much what's going on there. Let's see. Thoughts on Nage? I don't know. I haven't looked at Nage. Let's take a look. Niagen Bioscience. So this is probably going to be one of these biotech companies is my presumption. There's 4 analysts and they rated a strong buy. Hold on. I will share it. Yeah, biotech is always a bit of a crapshoot. You just have to be like very careful because it depends what phase it's in. In terms of drug trials, there's only four analysts that cover this company. It's trading at 726. The high valuation is 23. The low is 1120. Even the low valuation's a 55% discount. I personally am not familiar with this company, but it looks like the overall consensus is that it's at a pretty significant discount. Let me see. Let's go back to stock detail. See if they've had a recent earnings. Earnings surprise. So they have positive EPS. That's good at least. Most of the time, it's like not even positive EPS. But I'm not personally familiar with this company, like what they do. And I would say this is a very niche area. Like the people that do the best in Niagen. So like I take niacin, and there is a Niagen like supplement. It's a type of niacin. Niagen IV injections available at cryo clinics. Oh, like freezing yourself for the future. Yeah, I'm not familiar with that company, but looks very interesting. So we actually talked about this earlier. My view on Albertsons has not changed. That's one that I'm going to top off, frankly. They report, we looked at it earlier, a week from tomorrow before the market opens. So they report on the 14th. So we'll find out more then. But it's like, it's stupid cheap right now. The median valuation, which is $24, it's at a 43% discount. Just like stupid. So no, my opinion on Albertsons hasn't changed. But remember, when the market has like all this AI madness, a grocery store is not sexy. That's what happens. People are like, yeah, it's a grocery store. Why would I care about that? But it's like, if it's at enough of a discount, like that's the key. Oh, SoFi is a tough one because it has ripped. It started pulling back, which I was actually happy to see because it was way ahead of itself. 26.36. I mean, it's basically doubled since the last time we looked at it. It's a great company. I think it's probably ahead of its skis. Let me actually take a look at that. That's one, we were talking earlier about like trimming positions. Let's see. Let me share this. My gut is that it's probably a hold at best, if not overvalued in a sell. But yeah, SoFi is ripped. We were on top of SoFi. 26.36. The target's 21.89. Yeah, it's definitely ahead of its skis. Yeah, Needham has it at 29 target, but it's not at it's not at enough of a discount. But let's look at all the overall targets. The high 31, the low 12, the average 22. Yeah, it's a little ahead of its skis. Yeah, look, you want to buy at a discount, so it's not that it's a bad company. It's just it's a little ahead of itself, I would say. Do you think if we buy top analyst picks from CapIQ, people would outperform the market as they have more access to information than us? I'd say it depends on the company and the growth profile and the trajectory. Like Albertsons, the general consensus is that it's a buy, but the market has other ideas. So I think it's a little bit more involved than that. I think you always want to invest in stuff that you understand the business model. But if there's a significant enough discount, what I would caveat that with is the number of analysts covering the company. That's important. So if you have 2 analysts covering the company, like that's not enough. You'd want to see like there's a pretty significant consensus. When I see that the low, it's trading below the low estimate, that's usually an indication that like it's significantly undervalued. Yeah, so you had the same experience a lot of people have had. Biotech, you can get absolutely eviscerated. Yeah, I would say like big pharma would be much safer than small biotech. That's 100% true. What do you think of the efficient market hypothesis? It's a myth. I believe the market is not perfect, but most equities eventually trade at fair value. Yep, that's true. So there's weak form, strong form, and then semi-strong form. Semi-strong is pretty much where the market is. So you can't just look at where the stock has come from and say it's going to keep going up and to the right. That's weak form. Strong form says that even if you had inside information, it's already reflected into a stock price. I think that doesn't make any logical sense. I mean, obviously. So I would say, though, that it is definitely semi-strong. So over time, it should bear out. I definitely agree with that. But again, you look at like an Albertsons, it's like it's undervalued, it's undervalued, it's undervalued, and it's been undervalued. Sometimes it takes longer than others. But yeah, I agree with you. The market, I don't think there's anybody out there that believes that the market is perfectly efficient. If it were, then your best bet would just be by VOO. You could never outperform the market because everything's fully calculated. Is there any difference between S&P CapIQ and Bloomberg? Yes. So they're different platforms. I mean, they're pulling very similar data. But it's more of like a user interface preference thing. Bloomberg's more focused on like traders, and Cap IQ is more focused on analysts. Given the current government shutdown, the updated jobs report was not released. This means that the Fed doesn't have up-to-date valuable info to decide rate cuts. If that is the case, then ADP report got cut off. So I see kind of where you're going with the logic. Yes, like the Fed is kind of, stuck right now because they can't make decisions without data and information. So I would say don't expect, as long as the government's shut down, don't expect any, rate cuts until they meet again. But if they don't have the information, then they can't make a decision. Will you look at Original Energy in Australia? Okay. Original Energy. Original Energy. Show all results. Original Energy. Cannot find Original Energy. Do you have a ticker? Can't find Original Energy. When trimming a position, how much would you recommend to trim? So if a position has actually run, let's take Tesla, for example. It's run. What you'd want to do is your full weight position would be 10%. So if a stock has run up like crazy, what you'd want to do is you'd want to trim it down to that full weight position of 10%. Warren Buffett had 50% of his portfolio in Apple, and he trimmed it down to 30% because he still felt that it was significantly undervalued. But that's usually a rule of thumb. It was funny. I counted it the other day. I have 20 total positions in my portfolio, including VOO. So I have a few positions that are at 20% and then other positions that are at 5%. But I would only hold something that's at 20% if I feel like it's undervalued. So that would be like Microsoft. And then Joby is just a bananas scenario that I'm holding for 100 bagger. So that's up 4x. I'm not trimming that one. But I would say stocks that are like well covered, yeah, you would typically do it like that. So get to a 10% position would be a full position. Is it worth enrolling in Bloomberg's e-learning certificate course? A few people have asked about that before. I think in general, like getting a hard skill is more important than a certificate. So like what would be more relevant? Actually knowing how to build a financial model or having a certificate that says you could build a financial model? Actually knowing how to build a financial model. Like I've had people say like, oh, do you have a certificate? It's like, no, there's no certificate. You have the skill. That's the more important piece. So you want to have the skill more so than a certificate. Certificate's a piece of paper. Like think about it. Does Warren Buffett have a certificate that says certified investor? No. Does Tom Brady have certified quarterback? No. So the certificates, there's been like this move over the last like decade where like everybody loves all these stupid certificates, and it's like, what have you actually gotten from it? I would rather have the skill than a certificate. Like I'm pretty good at investing in portfolio management. I have no certificate that indicates that. I'm a CFA charter holder. I've got that, but the actual skill is something that has to be developed. Do you believe buying is the same as holding? No, not at all. Because buying would indicate you should increase your position. Holding just means you stay pat, you stay where you're at. So like if I give a hold rating, the indication would be don't trim the position, but also don't increase the position. So that's really the way you would look at a hold. From a portfolio management perspective, what you would always want to do is own everything at a significant discount. But the rule of thumb is if something's a hold, unless you have something that is at a discount, a significant discount that you don't already own, then you would just hold on to that existing position. That's really what I would say. That's how you would look at it. What does it mean for the U.S. government to shut down? What it means is that the budget has not been passed, so government employees are not getting paid. So people are still showing up. Don't worry about that. But that's what it is. It's that the budget has not been agreed upon. It has not been approved. So that's really what it means when they say shut down. There are some entities where, like, you know, it's closed for business, so to speak. But you know, everything's still running. Really insightful stream here. Thank you, Dev. Appreciate that. Oops. All right. Oops. Origin. ORG on the ASX, the Australian Stock Exchange. ORG. Let's see. ORG. I'm gonna have to go to Cap IQ. It's not coming up on Finviz. This is like next level. ORG on the ASX. Let's see. Come on, ORG. There it is. Origin, not original. I was typing in original. Let's see. Cap IQ estimates. Comes up as a hold rating. I'll share the screen so you could see. But it's just coming up as a standard hold. Nothing crazy. So latest close 1237, median 1185. There's 12 analysts that cover it. It's decent. Let's see the tear sheet. Integrated energy company. Exploration, production, natural gas, electricity. I mean, when I see something like that, I also see electricity from coal, photovoltaic systems. You know, once I get into something like that and it's like outside of a market that I understand, that's where I'm like, well. There was a rare earth company, Linus, that was an Australian rare earth company. It was one of the few publicly traded rare earth companies that I had come across. Here we go, the stupid window thing again. We're back. Yes, lots of thoughts. The data center energy demand story. Nuclear still around 20 years off. Yeah, I think natural gas is going to fill the gap. That's the answer. Yeah, it's way too long of a cycle for nuclear to have any impact. So I think that's what's going to ultimately happen. It's going to be natural gas. So, and we've got tons of it. So that's really what it is. Nuclear is a way longer term play. Way longer term play. Yeah. It's chartered financial analyst, CFA. But, you know, like passing the CFA exam doesn't mean that you're an actual, like, good analyst, you know. National parks. Yes, that is true. So the question related to the government shutdown. National parks get shut down. There's a few things that are impacted, but, like, you know, there's still a lot of what's like sad is people are showing up for work. They're just not getting paid, but they'll get back pay later on. Do you own any nuclear energy stocks? I do not. How do I feel about nuclear energy as a whole? It's a very long life cycle. It takes like more than a decade to build out a nuclear facility. Very specific engineering that's involved in that, like 10 to 15 feet thick concrete. I heard a story that there was one they were doing in Georgia, I believe, and there was an issue with the pouring of the concrete. They had to knock the whole thing down. So it's very, very, very heavily regulated. It's not something that you could just like build out like boom. But I've heard all sorts of stuff like compact nuclear, like all these, you know, other alternatives. Like it's going to be natural gas. That's what's going to be the answer. But I've seen nuclear energy stocks have popped. Yes. Do you always run a full analysis and build a financial model every time you invest in a new stock? 100%. Yeah. I would never invest in something without being confident as to the value. So I don't trade, not really my thing. Have I done it before? Yeah, like during COVID, I traded AMC. Silver Lake had convertible debt that converted into equity at $16 a share. So I bought in at 9 and I knew at 16, Silver Lake's getting out. I'm getting out with them. So outside of something like that, not really a big fan of trading, but yeah, I always build it. Thoughts on SBST? It looks like maybe SBS. SBS. Thoughts on SBS? So let's take a look. Let's pull it up. SBS. Compañía Saneamiento Básico. I'm assuming this is oil in Brazil. Oh no, it's utilities. Let's see. I mean, obviously you have the international exposure there, which could be good thing, bad thing, depending on how you view the market. Here it is. Target price 24.38, and it's at 24.05. I mean, the last time, the February 24, 2021, I'm assuming that's going to be stale. Let's see if I'll pull it up on CapIQ, see what they say. SBS. Huh. Stratec is coming up. Maybe I have the wrong company. Do I have the right company? I want to make sure I have the right one because I don't know if I do. Stratec is coming up as another one. Clorox. My fair valuation for a great defensive company. Yes, there's debt. 105. Yeah, so Clorox Specialty Chemicals Company, great brand. Definitely has pulled back. I haven't done a full valuation of Clorox, but let's take a look. CLX. That is definitely a well-followed company. Wow, yeah. That's had a fall from grace, my friend. Let's share the screen here. Yeah, I didn't realize that it hit the skid so bad. Yeah, I mean, Clorox, big time name brand. 118.67. Wow, it's down 27% year to date. Oh, interesting. Barclays has them underweight at 112. Let's see what it says here. The high 155, the low 110, the average 130. So it's not at a huge discount, but there's got to be something else going on there. Sometimes when companies like this have a few bad quarterly reports, the stock will just waver. And looks like this was good. Yeah, they surprised on EPS and revenue. Maybe they had like a crappy outlook, because this should definitely result in a nice stock pop, but it didn't. It actually has gone kind of down and sideways. That's an interesting one. Yeah, I'm a fan of the company. I was looking at international energy producers. Okay, and that's why I'm interested in Origin. If you could only invest in either Berkshire or HHH in the next decade, which one would you choose? If I could only invest in one, I would say HHH. I mean, in terms of like upside potential, I know this is like very controversial for me to say this, but if I look at Berkshire, its market cap is 1.07 trillion, and HHH is 5 billion. So, I mean, you're talking about an order of magnitude difference of 200 times. So I would definitely be more inclined, if I could only invest in one, HHH. You're investing in Bill Ackman. who I'm a fan of, young guy. Again, nothing against Greg Abel from Berkshire, but he's not going to be able to invest in the same size companies. Greg Abel in Berkshire, he has to invest in like massive companies. Whereas if you look at HHH, like your investment mandate is very wide open. You can invest in a ton of stuff. So I would say that would, of the two, I would go HHH over Berkshire. Yeah, ANF, that's one. It's been, someone mentioned it to me on the channel to look at. They were talking about the brand value. And I mean, I'm always leery on retailers. I know we got Lulu, but it looks like it's undervalued here. Let's share it. Sharing is caring. Here we go. Abercrombie and Fitch. Very, very well-known brand, obviously. Let's see what their earnings were. They surprised on both, but just barely. Targets at 110.56. But let's see what the recent downgraded today by JP Morgan. And they have a price target of 103. So that's still a pretty significant discount. That's like a 25% discount. But I'm always leery when there's multiple downgrades there. I'd have to dig into that. Retailers are tough. I know we looked at Lulu, but I need to know more about Abercrombie's footprint and their real estate exposure. Let's see. CLX did. Okay. So they did some divestitures. Margins have improved. Okay. Yeah, little to no growth. It's a stalwart. It's late in its life cycle for sure. I found a podcast you participated in last week. Yes, I did. Jim Oliver's podcast. I want to do more podcasts. That's something. I mean, this kind of is somewhat like a podcast, but eventually I'll have a podcast. It's true. I don't know if that was me, but it might have been. I've been a long believer of it, as every woman I know loves it, like way more than every other. Yeah, Abercrombie's an interesting one. Yeah, that one. There's something else deeper going on there. Again, you guys have figured out like I don't like shoot from the hip. If I know about a company, I'll be like yes. But that one I haven't looked at in a while. But a few people brought it onto my radar. Maybe it was you, Cooper, but I feel like there was somebody else that put it on my radar and said, check it out. Definitely undervalued. Da, 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 da. Yeah, Lulu. No real updates. I think now it's just a matter of execution. I think their fourth quarter, which is always their best quarter, they've guided down twice. So it's kind of like all the bad news is priced in. Their fourth quarter is their best quarter. They're going to report that in February or February or March. So let me actually look. Lulu earnings date. Because it could pop if they have one more before that. Let's see. December 4th. I don't anticipate anything super positive there. But even the CEO, Calvin McDonald, said he anticipates that they're going to see recovery in the new year. So I would say like the market will react positively to Lulu if they don't guide down anymore, which sounds ridiculous, but they lowered guidance 2 quarters in a row. So that's the bummer. Do you have a link to the podcast? I do not. Let me see if I could pull it up in the background, because it was my buddy's podcast, Jim Oliver. Breakaway Wealth. Let's see. Jim Oliver, Breakaway Wealth podcast. Ken Freeman. Let's see if it comes up. It's my. Oh, hey, wait, hey. Let's see. How to blow past the majority in your investments with Ken Freeman. Oh, yeah, here it is. I'll put it in the chat. This is the Apple podcast link. Yeah, that was last year. Here you go. There you go, everybody. Enjoy. Yeah, so that's the Apple podcast link. I did that, was at 4/23/24. Yeah, so check that out. Holy Moses. 2 hours and 40 minutes in. This is a new world record. Let's see. Curious, my wallet won't allow it, but where does the first year iBanker in New York City live and eat? Fine dining. Oh, blah, 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 blah. There's a lot of nice places in the city. I was actually at Hunt and Fish Club last week. Huge fan. Highly recommend. That's a good spot. But if you want like a stereotypical place, Delmonico's, Spark Steakhouse, places like that, Rayo's, those are the like stereotypical investment banker spots. Those are the places. But break open the wallet, you know, every so often. It's worth it. Just do it. I feel retailers are the best because they get cheap extremely quickly and appreciate quickly as well. Yeah, that's true. That's true. Retailers do. What's your opinion on Tom Lee and his ETF fund strat? I feel like more people are like bigger fans of Tom Lee than I am. I'm not opposed to the guy, but someone on one of the previous live streams, they were talking about how Tom Lee was saying that he was comparing NVIDIA to Costco, and I was just like so confused because he was comparing them on like a an earnings basis, but not a revenue basis. So like if you look at it on an earnings basis, Costco has like a higher earnings multiple, but if you look at it on a revenue basis, Costco has a very low multiple. But retailers don't trade on earnings; they trade on revenues. So it's just like a very bizarre thing. But I'm like, of all the investors that I follow, he's not one that I follow in particular. I'm not like anti him or anything. What's your business email? Would love to contact you about a partnership opportunity. Ooh. So I would say the easiest thing to do would be DM me on either LinkedIn or Instagram. Most people have reached out on LinkedIn. It's easy enough. So that would be the best way. All right, guys, I'm going to be shutting it down. I actually have a modeling program that I'm doing the next couple days at a corporate client, and I need to wake up early and freshen up the materials for market close. But be on the lookout for this Friday, 6 a.m. as per usual. I'm going to be releasing a new video as always. Don't forget to like, share, comment. That helps the algorithm. And tell people about this live stream every Monday, 7 p.m. Wouldn't be here without all of you. Appreciate every single one of you and love the conversation, the back and forth. All right. Have a good one, everybody. Peace.